Welcome back, everyone. In this video, I'm going to be going over growth ETFs, in particular QQQ. It is probably one of the most popular growth ETFs in 2024 currently, and probably for several years prior as well. And I myself do think that this is a pretty good ETF. I hold quite a few shares in general, and it is my second largest holding overall. I currently have about $27,000 invested, and this is only second to VIG, the Vanguard Dividend Appreciation ETF in my portfolio, sitting on about 54 shares approximately. And before I get into the ETF itself, please remember, if you do enjoy this content, give this video a like to get this video out there to a wider audience, and subscribe for future content. Now, speaking about the popularity of this ETF, it is the fifth most actively traded ETF by assets under management, and it only comes in second to ETFs that track the S&P 500 and Total Market ETF VTI, which tracks the entire market. So this is an extremely popular ETF, sitting at about 300 billion assets under management. As I said, quite a few people own it, and for good reason, especially recently. Now, QQQ, the Invesco QQQ 100, has a very simple investment methodology. As the name implies, it invests in 100 companies, and these companies are selected from the Nasdaq, and it selects the top 100 largest companies in the index, and then it excludes financial companies from that list. So the Nasdaq is a stock exchange, and the Nasdaq Composite is an index that tracks that stock exchange. So basically what you're getting here is an ETF that tracks the largest 100 non-financial companies in the Nasdaq Composite. And the Nasdaq itself is a very technology-heavy index. About 59% of the ETF itself is in the technology sector, and then followed far behind are things like consumer discretionary, healthcare, industrials, telecommunications, and so on and so forth. But basically what you should take from this is that if you're investing in this ETF, you're going to get a large portion of your money into the technology sector as a whole. So when I go down this list of the top 10 holdings, it is going to become very evident that this is a tech-heavy ETF. So first on the list, you have Microsoft, followed by Apple, Nvidia, Amazon, Broadcom, Meta, Tesla, Alphabet, and then Costco. And of course, Alphabet here is Google, and then Meta is formerly Facebook. Now, each one of these stocks, I am sure you have heard quite a bit about them. They have been extremely popular lately. And another important thing to consider with this ETF is that this ETF is an extremely top-heavy ETF. In other words, the top 10 of this ETF constitute about 50% of this portfolio. You could see the percent of the fund each of these holdings have, and something like Microsoft, which is its top holding, has 9%, followed closely by Apple and then Nvidia. And then we go further down, and that just drops less and less, all the way down to its 10th largest holding, Costco, only at 2.55% of the ETF as a whole. So you pretty much have the top 3 or 4 holdings comprising 25% of all of your investment into this ETF. So when you buy this ETF, you're getting a lot of Microsoft, Apple, Nvidia, and a little bit of Amazon and Broadcom there too, as well as the remainder, which count for a comparatively small portion. A little bit of a technical overview of this ETF. It does have a somewhat high expense ratio. It has an expense ratio of 0.2%, and a lot of the more popular ETFs that have a high assets under management usually stay around 0.03 to 0.05%. So considering how popular this ETF is, its expense ratio is somewhat high. Now, there is another ETF, QQQM, which has a much lower share price, if that is important to you, and then also a much lower expense ratio. Does the same thing as the ETF QQQ, just less costly overall. Now let's get into the performance. Year to date, this ETF is up 21.44%, and over the past 10 years, it's up 421.07%. So quite a bit of growth in this ETF, both in the past year to date and also the previous 10 years. And that has major things to do with its weighting in technology. Technology sector has been on fire year to date, and of course, throughout the prior 10 years as well. And to give you a general idea of its outperformance, as I said, this ETF is up 21.44%, while the S&P 500, or VOO, an ETF that tracks the S&P 500, which are the largest 500 companies in the United States, is up 16.83%. So a pretty good outperformance there from QQQ as a whole. And quite recently, a lot of people are worried about this ETF's outperformance. A lot of people do consider that this ETF and the industry as a whole is getting overvalued. So one of the main concerns with this ETF is the underperformance going forward of the tech sector. So if any one of these stocks here pretty much have a downtrend, then you're going to see a decrease in the growth of QQQ as a whole. And this is especially true of one of the most popular stocks out there currently, which is Nvidia. It is 7.77% of QQQ's total holdings. And a large portion of QQQ's great performance over the past year to date is because of Nvidia. So Nvidia is up 166.14% year to date, and quite a few people are beginning to get concerned about this valuation, because there really isn't in their minds a lot of room to grow. And I'm not here to debate whether or not Nvidia will grow or not. I am invested in quite a few different types of ETFs. So even if Nvidia itself does not perform too well, I am not so worried. But if I had just QQQ, I may be a little bit more concerned about Nvidia's recent outperformance, because it does comprise of over 7% of QQQ's holding. Now, with that being said, Nvidia is propping up a huge upcoming sector, and this sector has been around for a while. It's just been grouped into information technology, and that is AI, or artificial intelligence. So here's an article from Vox that says, is Nvidia stock overvalued? It depends on the future of AI. And I'm not going to get into Nvidia too much because this isn't an Nvidia video, but I just want to give you a good heads up that these are major concerns with this ETF, because if tech ever gets hit, then you're going to be, for sure, QQQ is going to get a massive hit as well. Now, leading away from technology a bit, as I said before, this ETF does include other sectors. It's not just an ETF that is technology based. So for example, its top 10th holding is Costco, which really wouldn't be considered a technology company, and that comprises of 2.55% of the total portfolio. And I am going to scroll down to give you an idea of a lot of these tech stocks and also stocks across different industries. So you see things like Pepsi, which isn't a technology stock. You see some other stocks like Amgen, and that is healthcare. And I just want to give you a brief overview of these holdings as a whole, because it's important to understand, if you are buying this ETF, pretty much what it invests in and what are the risks. So the main risk of this ETF is, of course, the tech sector. Now, if you think technology is still going to be the rave for the next 10 years plus, then I don't think that this ETF is due to concern you, because if you believe in technology as a whole, this is probably one of the better ways to invest in it. Although you could go with a sector specific ETF, something like XLK, that just tracks technology instead of including all of the other ETFs holdings in there, like consumer discretionary. Now, here are some news articles just to give you some insight of popular news today. And there's going to be positive and negative news. Things like maybe it's too overvalued, or maybe this ETF will still go on another bull run for the next 10 years. You're going to see it all. There's a lot of positive or negative sentiment surrounding this ETF. Now, I want to tell you the absolute truth about this ETF, because I think a lot of people get this ETF wrong, and I even included it into the thumbnail of the video because it definitely is considered this way. But a lot of people consider this to be a growth ETF, and that is not the way this ETF is marketed. I could not find on the fund page anywhere that this is a growth ETF, and that is because it's truly not. This ETF tracks the top 100 largest companies in the Nasdaq 100 and excludes financial stocks. Now, it just so happens that this ETF, being tech heavy, has had an incredible amount of growth recently. I mean, look at these companies. I don't think anybody can dispute that these companies have pretty much been all the talk over the past year or 5 years plus. So a lot of this growth that you do see is just because of the sector holdings that this ETF has, and that is technology. Now, we can contrast this ETF to ETFs that do focus on growth investing, such as VUG, the Vanguard Growth ETF. It is one of the most popular growth ETFs based on assets under management. And you're going to absolutely see similarity between the industry diversification and the overall holdings of this ETF. So technology, just like QQQ, is definitely the largest holding and pretty much 3 times everything else. So this ETF holds 58% of its assets in the technology sector, just like QQQ does. And even the top 10 holdings of this ETF that VUG has is quite similar to QQQ with a little bit of difference. So it still has Microsoft, Apple, Nvidia, and Amazon and Facebook and Google, but it also includes Eli Lilly and Visa instead of what QQQ has. Now, this ETF, of course, focuses on growth, and as I said before, QQQ does circumstantially have a lot of stocks that have seen huge growth. But the investment methodology is hugely different. So this ETF has an investment methodology of seeking to track the performance of the CRSP US Large Cap Growth Index, unlike QQQ, which follows an index of the largest 100 stocks in the Nasdaq. And that ETF selects its holdings quite a bit different. So this focuses on a bit more of the technicalities and fundamentals of the companies themselves. So the companies need to be large and have good future long-term growth earnings per share, and also future short-term growth earnings. So it pretty much has this investment methodology to the right here, and you can see that it isn't like the QQQ ETF at all. This focuses on fundamentals of these companies and not just tracking an index. Now, whether the Nasdaq 100 is due to outperform in the future is quite a hot topic, and it's up to debate for a lot of people. I, of course, hold the ETF, and I think that if I thought that it was going to drop significantly, I wouldn't be holding it. The tech sector as a whole is pretty much running the world currently. So I do have faith in this ETF, and as the ETF does hold a significant portion of technology companies, I don't think it is going anywhere anytime soon, and of course, it being the 5th most popular ETF based on assets under management, I think a lot of people have faith in it as well. So if I was to give you a quick summary of this ETF in 20 seconds, I would say that this ETF holds 100 companies. The ETF is very tech heavy. It has a decent expense ratio, and it is an extremely popular ETF among investors. Please remember, if you did enjoy this content, give this video a like to get this video out there to a wider audience. I'd greatly appreciate it. And also subscribe to keep up to date on future content. See you all in the next video.